Hey guys, so today is September 19th, and just been playing with this idea of taking our day trading idea to a option strategy, and really been playing with it and back testing it. And there's a couple other people that I know that do this, and they're doing really good with it. So I thought I would outline this idea and just quickly put it on video and on this spreadsheet. So this page here will be downloadable for you, and we can start our live groups and go through the actual mechanics. This is a good strategy, very simple, very powerful, and really profitable. So the name of this is the zero data expiration directional momentum play. And this, our recording conditions are not optimal right now. The kids are up and running around, so you might hear them in the background acting crazy. If that's the case, sorry, I just want to get this out there so that next week we can kind of get into this a little more. All right. So the purpose of this directional momentum play is it's a day trading idea. Um, you're going to be in and out of this trade within the day. So it's not a multi-day trade like a 30-day option trade. It's a 0 day to expiration trade. You can do 1 day to expiration, but it's really the same day you put it on is the same day you're taking it off. All right, um, and it's a directional option strategy that exploits short-term theta decay. So this is option strategy. We're selling credit spreads here. So we're taking advantage of theta decay on those option strategies. So we're not buying options, we're selling options. That's why we're taking advantage of the theta here. So the market condition we're looking for depends on a few variables. We're looking at the relationship of the 5-day MA and the 10-day MA, and look at RSI on the 14 period. So the three things we're using to uh, assess market condition is the 5-day, the 10-day, and the RSI 14 period, 14 period MA. I mean 14 period RSI. All right, so if the 5-day is above the 10-day and RSI 14 is above 50, then consider that a bullish market. If the 5-day is lower than the 10-day and the RSI is less than 50, then that's a bearish condition. And ideally, you want the VIX level to be above 15 in either market condition. That's ideal. It can be done. The back test shows it's profitable even through that. But when I went through and did some lower VIX levels, it wasn't as profitable as when you have a higher VIX level. So you have to look at that too. But it's not necessary. All right, so the mechanics of this strategy, if the market is bullish, then you sell the 40 or 50 delta put spread with 0 days to expiration. If the market is bearish, you're going to sell the 40 or 50 delta call spread with 0 days to expiration. And the exit criteria is you take this thing off when you've hit 100% of your max profit or a loss of 150% net credit. And I'll show you what that looks like. So the results of this strategy over the last 6 months was that selling the 50 delta put spread, buying the 20 delta put spread results in a 345% return on risk in 6 months with a win rate of 84%. That's incredible. That's better than a that's better than most day trading strategies, and you're only really implementing this 3 times a week. So it's not like, and you don't have to be in front of that monitor all day. That's the beauty of this. And we like to live at the 40 delta put spread by the 20 delta put, and that will give you a 261% return on risk with a win rate of 84%. So this is downloadable, and then I have the results here from the back test. Um, Show you what your chart should look like with this strategy. Here we go. This is the daily. We're on the ES or whatever instrument you want to play. So the yellow is the 5-day MA. Okay, the 5-day MA. Blue is the 10-day MA moving average. This indicator here, so that's all I have on these, on the upper chart. Lower chart, this is a CCI. You don't need to have that. I kind of like it on there just because I always look at CCI. But you don't need to have that for this one. You need to have this RSI with a setting of 14, and on any day that you enter, okay, you're checking the RSI on that day. What is the momentum on that day? So the momentum, for example, we're looking at 7:30. Momentum on that day is RSI of 61. Okay, so on 7:30, if you were to enter in on that day, you can see that um, the 5 is a little bit lower than the 10, but the RSI is 63. So it's really a bullish strategy. Plus, you can look at you can see that you close higher the day prior. So that's not the best example. Best example will be this day, okay? Because on this day, your 5 MA is above the 10 MA, and the RSI on this day is 61. So you're looking right here above 50. So that's a bullish strategy. That's a bullish, you would play the bullish strategy on that day. Okay, a day like, let me show you kind of a questionable day. Most of these days were bullish, but a questionable day would be um, uh, well, let me see here. Yeah, this is a good day. Okay, so this is obviously a day where the sentiment and what the moving averages are telling you are different. So um, yeah, good. Okay, so here on this day, big red day, the 5 is above the 10. So that's kind of telling you that, by definition, that's a bullish day. But the RSI is 49. So the momentum was starting to go the opposite direction there. You would not implement the strategy on that day to the bullish side. You would do it on the bearish side. You'd be selling the call spread here. All right, so that's what you need on your chart. You need the 5, the 10, and you need the RSI to assess momentum. Okay, on your, show you what this looks like. These are the results. They're attached to the page. So what we're doing is we're testing the SPX over the last 6 months. And our strategy criteria is short put spread. You want a technical open. The technical open criteria is the 5 MA has to be above the 10 MA. and the RSI has to be above 50. So we're kind of selecting bullish days. We exit if the net gain is 100%, and or if it loses more than 150% net credit. So criteria is data expiration is 0. So there were, on the 40 delta, there were 28, there were 33 occurrences over the last 6 months. You won 84% of the time with a total return on risk of 261%. That's amazing. And this is your profit and loss curve over the whole time. It just keeps going up. That RSI is really amazing. All right, so now, and I know I'm moving quick here. I'm putting a lot out there. I just want to get this out. We can go over the details later. Let's say you're gonna put this strategy on. Okay, and so looking at going into Monday, this is what our chart looks like. So our 5 on our daily, the RSI is, basically the CCI is -14. The RSI is not on this one. Let me pull it over. Here we go. So the RSI is 43, and you can see the fast and slow period moving average are kind of close, but the day before the 5 was lower than the 10, and we're making lower lows. So going into Monday, how you would implement this strategy is you would go into the trade tab, and you would see your option chain. Right, you have this is a 1 day to expiration. So if you were going to implement this strategy tonight when the market opens, this would be 0 to 1 day to expiration is fine. You would be selling the call side because we're bearish. So you would be coming down here to the 30 delta call spread. You sell that, and this is what that looks like. Okay, so that's what this looks like. It's gonna have literally 2 days till expiration today, and then by Monday this will be expired. Let's see, it's 21st is Monday, so you would be putting this on today on the 20th, and then the next day this thing is has a life of about 1 day. It goes in expiration. So here we can see that our level, we have a max profit of 750 with risking 1700, 10 contracts. And if the market comes to, we exit if it goes to 750, or we exit if the market gets to 1.5 times this. So for somewhere around 1200, 1400, you're basically letting it, you're not letting it go all the way to max loss, but you're starting to think about exiting when you get above 100% of the net credit loss. So if you can max 750, you're getting out around 750 plus. Okay, so if the market came, when it starts getting to 33.41 is when you would think about getting out. And where is that level? Let's look at that. And that's where the pivots help too. 33.41. Okay, so if we put this on tonight, see, R2 is around 3,400 level. That's way up here. So you have to watch it. But 33.41 is here. 33. I mean, you really can't get above the you really can't even get above the 10 MA level. That's 33.61.60. That's tight. Let's see what 33.60 looks like. 33.60 puts us at the 15 delta. Let's sell that one. Okay, 33. So you'd be max profit is 350 here, and if it hits that level, you're losing 700. So almost 2x of what your max credit is. Okay. I mean, it just gives you something to think about. Theoretically, you want to be outside of these resistance levels, but you have to look at all your levels. Look at where you are in relationship to everything. You might want to just play off the 10 MA, or you might want to play off R1, 33.85. But that might put you so far out there, you may not make the risk to reward may not be there. But this is a great idea, and it ties together a lot of the technicals, as well as a lot of the the idea of day trading. People like that idea of day trading, but how do you manage risk? So this is, and plus, I mean, over time, you can see the results. I mean, it's at 30 delta, 50 delta, your win rate is really good. You're winning most of the time. Even if we put another day on here and ran the test, let's see what that looks like. Yeah, you're still doing good. I mean, your win rate is 84%, and you're getting a 261% return on risk. Even if you let's look out 5 days. Let's put a 5-day. Let's extend our duration a little bit more. See, now you don't start. Now you're not making as much, but it's still not bad. But really, the power of it is in taking advantage of that short-term theta decay, and the short-term momentum that's in play at the time, whatever that is. All right, I'm glad I got this out, and we'll talk about this later.